The US dollar slips on Dovish Fed signals. Um, US index peak and with the dollar itself, but the pound helped it along. RBA, the Reserve Bank of Australia, may raise rates while Japan may intervene in the FX market. As soon as the dollar weakened, its competitors immediately stiffened their resolve. The pound rose due to the market's acceptance of Rachel Reeves' draft budget. The yen rose following the government's strongest verbal interventions. The Australian dollar rose amid speculating about a key rate hike by the Reserve Bank, and the euro rose on hopes of a resolution to the Ukraine conflict. However, the foundation for the decline was laid by the dollar itself. Dovish rhetoric from influential Fed officials, a series of disappointing economic data, and the Hassett factor triggered a sell-off of the dollar. The New York Fed President John Williams, San Francisco Fed President Mary Kay, and their FOMC President Christopher Waller signed to cut the federal funds rate in December. In their view, the risks of a cooling labor market outweigh the risks of accelerating inflation. Data supports this view. ADP reports a decline in private sector employment. We have ADP employment payrolls coming out this week. The ADP private payrolls is basically data that shows private companies, are they hiring or are they firing? So if employment goes up, we can expect that's going to be bullish for the dollar. But if employment goes down, then it's bearish for the dollar. ADP reports a decline in private sector employment, while another reports on repeat applications for unemployment and benefits has returned to a 4-year high. Concerns about the fate of the labor market are forcing Americans to tighten their belt. As a result of changes, the chances of the Fed cutting rates in December by 85%, triggering a fall in the dollar. The pound's reaction to tax increases in Britain accelerated the decline. Rachel Reeves plans to increase budget revenues by targeting healthy individuals as well as expensive real estate and investments. The markets reacted calmly to this approach, and GBP/USD continued to strengthen. The OBR's upward revision of its economic forecast from 1% to 1.5 may cause the Bank of India to question the need for a rate cut in December. Down under in Australia, inflation accelerated to 3.3% in October, may force the Reserve Bank of Australia to raise rates. The annual CPI growth rate exceeded not only experts' forecasts, but also the upper limit of the Reserve Bank's target range of 2 to 3%. As a result, some investment banks began to argue that the next step would be to tighten monetary policy. AUD/USD responded with growth. Meanwhile, Finance Minister Satsuki Katayama stated that an agreement has been reached between the US and Japan regarding currency intervention, which allows the government to consider intervening in the forex market if the USD/JPY really persists. The 8th of December, guys, today, on the 10th of December, we have interest rate cuts. The US Fed is going to cut interest rates. So I don't trade forex, but if you do, then you should be buying currencies like the euro dollar, euro USD, GBP USD, AUSD. Those are all buys. Because the dollar is going to be weaker against the euro. But if you don't trade FX and you mostly trade crypto like I, then you should be bullish on BTC since rates are going to be coming down. When interest rates come down, everybody feels a little bit more richer. But the problem is most people don't own any assets, so That's why they don't, how do I put it? Nothing happens in their lives they don't buy when they don't own any assets. So if you don't own BTC and when rates are coming down, then I don't know. Anyway, guys, that's it from about FX market.